Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB this Thursday afternoon. I'm Juliette Sarli. Well, this time yesterday we were looking at a fresh closing high for the ASX 200. Today, a different story. Certainly the big rotation that we've been expecting from the banks into the miners seems to be underway. And today we have seen a sell-off, although a little bit of a buy coming into the close there on the CBO 200 in the last 2 hours or so, only off by around 0.1%. We were down around 0.5% across most of the day. And in fact, it looks like the ASX 200 has just flipped into positive territory. So you can never really tell with these markets, can you? A little bit of buying coming through on the end. 8,602 is where we sit. So in terms of some of the thematics of the day, we might not worry about those because it did look like we were retreating from records, but instead it looks again like we have closed in positive territory only just. But as I mentioned, it really is this great rotation that you are seeing. The material space really looking solid today. We had that push higher into iron ore, also a lot of the base metals, energy prices also up overnight on geopolitical news. And of course, as we heard that the US and Vietnam have reached a trade deal. So the material sector up 2.5%, energy up by around 0.9%. Where we did see the weakness though was the banks, so CBA being dumped there. You can see it down 2% to $179.72, so dipping below 180 after, of course, this time a week ago holding at $192. Should note as well we're on NFP watch ahead of the non-farm payrolls coming through a day earlier because of the July 4 holiday. Right, let's have a look at some of the other sectors on the market today, and it really was the gains that you saw here coming through in the iron ore players. Rio Tinto up by almost 2%, Fortescue up by almost 2% as well to $16.26. And have a look at MinRes there, up by 8%. I had a great chat to Alvia Asset Partners earlier today, Daniel Martin. That's one stock that is on his radar for 2026 financial year after, of course, it was very unloved due to the lithium dump over the course of last financial year. And then, as I mentioned, the energy stocks, some upside in Woodside, Ampol, Beach Energy, Karoon though going the other way. In terms of some of the corporate news, well, we heard Dexus suing AMP over the sale value of Sydney's $1 billion Macquarie Shopping Centre. Dexus pretty unchanged there, but AMP, has said it's going to challenge this in the Supreme Court of New South Wales. Shares up more than 2%. Medicus having a solid session, up 8%, signing a 10-year deal with the Colorado-based company UC Health worth $170 million. And NRW Holdings inking a $167 million mine development contract with Rio, sending shares up 4%. And then it's been a big week for IPOs. The housing developer GemLife making its debut today, up by about 4% on the close. This was a debut of debut on the market, the biggest IPO on the ASX so far this year. Elsewhere, the energy producer Gold Hydrogen to receive $14.5 million investment from Japanese car giants. Andrew just spoke then to the CEO. Also, Santa Fe looking good if you were in that penny stock, up by an impressive 250% on a gold project acquisition in Cote d'Ivoire. And still in that small cap gold space, WIA Gold up by about 10%. It's found some gold in Namibia. Well, let's welcome one of our golden guests now, Jimmy Jang from GBA Capital joining us. And Jimmy, we've been talking for some time that it looks like the rotation is due. It looks like it's finally here.
Absolutely. Like we kind of were talking about this for a while, especially with how overvalued the banks were. It's kind of really good to see now that big rotation is coming through. Obviously, another kind of data that was really on the focus this week was the Australia's recent retail sales and also the building approvals as well. Obviously, both quite weaker than expected, and the retail sales rose about just 0.2% in May, below the 0.5% forecast. Obviously, with that, building approvals actually rose by 3.2%. What that kind of data obviously shows us as an investors is obviously the consumers are, still being very cautious, and we're kind of seeing that show up in the discretionary spending as well. So, and another kind of focus that's coming ahead of us as well, Juliet, is the RBA's meeting. The market is pricing in around, 21 basis point cut. Those obviously not locked in, but we've seen some, banks like ANZ, kind of moving early, cutting that fixed mortgage rate by 10 to 35 basis points. So we might slowly see that with the other banks as well in the big four. But the key thing is that, if the RBA starts cutting the rate while we're not in a recession, that's obviously in theoretical manner very typically bullish for the equity market. So it kind of will kind of signals the confidence in the outlook, and obviously provides support for both the consumer and the business sentiment as well. So that's obviously going to be fueling the minerals sector all at the same time. So looking forward to see that very soon.
Yeah, absolutely. All right, let's get stock specific. I mentioned the IPO GemLife, very heavily oversubscribed. So it looks like our appetite for IPOs is certainly coming back.
Yes, I mean, we saw the biggest IPO, as you mentioned, Julia, coming on the market as a debut, which is really, really positive. Open 6%, obviously closed about 4.5% now. But like you said, they're in that defensive and a steady income play within the residential real estate. And just coming back to what I just said, if we see this RBA rate cut coming in over the next couple of days, then obviously GemLife support is going to be backed by that as well. So look, it seems like this is now a really good time for the companies to come onto the market, because we saw the big IPO debut with, let's say, Virgin coming in, and also GemLife now coming in as well, with both showing some good positive news. So hopefully we see some more activities in the M&A space and also in the IPO space. So we'll kind of looking forward to that throughout the year as well.
Yeah, absolutely. Now, another standout stock today was Medicus, getting very close towards records. Some new US contracts here.
Yeah, I mean, they jumped more than 6% on that news, like you said, Juliet, on that two major US contract that's worth roughly about $200 million. It's a really strong reaffirmation of the company's global growth strategy, and the leadership in that medical imaging tech is coming to a light. And Medicus has been probably one of the favorite stocks that personally my clients been holding on for a very long time. And we were obviously considering whether Medicus has been overvalued, since the big rally we saw, close to about a year ago. But with this kind of new two contracts being added, I think the company's even in a better position. We'll kind of look forward to see some more brokers updating their target price for Medicus as well. So, definitely if you're holding on to it, it's a good news for the market. But, for people that's putting on the Medicus on the watch list, definitely a lot more closely watching this company right now.
All right, heading the other way though, and this was a big company in focus yesterday. Domino's absolutely smashed on news that its CEO is leaving after just over a year in the job. What does that tell us about, potentially what could be under the hood at a company like Domino's?
Yeah, I mean, it is one of the major move, right? Like, Mark Van Dijk, he was one of the kind of early moves that he was doing since his appointment was closing those 200 underperforming stores, mostly in Japan and Europe. And the market rewarded that at that time when that happened. But ever since then, there wasn't any kind of sudden news that was going to be supporting the market share. And obviously, traditionally as well, the market doesn't like sudden leadership changes, especially in like a turnaround stories like Domino's. And I think another thing that added to that pressure was the regulatory pressure on this wage bargaining is also on the rising. So for example, McDonald's has been pulled back into that union negotiations on the new multi-employer laws, and that obviously opens the doors for other franchisees like Domino's and even Pizza Hut as well. So there's a lot of pressure on the company right now on top of the management. So it will be kind of very disappointing kind of obviously result that we saw from the management itself, but we'll kind of have to see what the management will be doing in the future.
Okay, and just looking more broadly as well, we are looking ahead to the non-farm payrolls in the US tonight, but we've got to remember as well, next week, I think it's next Wednesday, our time at least, is July 9. We seem to be forgetting about the tariff deadline.
Absolutely. I mean, we have too many exciting things happening in the Aussie market, so we may have slowly forgotten of all the big things that's happening over in the US. But yeah, like you said, Juliet, the market over there, and as Australian market, I'm sure, is increasingly focused on that reciprocal tariff suspension, which is expiring on the 9th of July. Well, obviously, the obvious concern is that it won't be extended, and that's obviously injecting some more fresh uncertainty into the global trade sentiment. But we saw some good news, obviously, coming out over the few days. We saw that to a 20% tariff on imports from Vietnam that got deal sealed, hopefully right now. But negotiation with those key other partners like Japan, the EU, and the India is obviously stalled, and mainly over those US demands to kind of lower auto tariff and open those agricultural markets. So that's actually proving that it's politically sensitive for those countries, and obviously the longer this uncertainty kind of drags on, the more it will weigh on the equities, particularly in those export-driven sectors. So for those people that's kind of waiting for this to come through, it's probably really good time now to really reevaluate what kind of exposure your companies and your portfolio have to this potential volatility, because US wants lower tariff on autos, so probably that's a good starting point to start to reevaluate.
All right, always a pleasure, Jimmy. Thanks so much for your time. Jimmy Jang there from GBA Capital. Getting back to some of the stock specifics, well, we've been asking our panellists this week what their picks are for the financial year 26. We had Mark Gardner from MPC Markets, he likes Findy, Luke Winchester from Merewether Capital looking at E-Road.
Findy's delivered a really high revenue growth, really strong free cash flow, underpinned by a really scalable business model, and the balance sheet's been quite strengthened. That record revenue is around 75.5 million, but the real catalyst for us is the re-rate coming from the IPO, because pre-money IPO valuations on the in the Indian Stock Exchange would basically re-rate this around about 700 to 900 million.
You've got a real SaaS software business in the enterprise fleet management. Basically, their customers are logistics companies or any sort of enterprise that operates a large fleet of vehicles. 95% recurring revenue, those high gross margins that I like to see, those that around 85% here. And like a lot of software businesses, had a pretty turmoil period through that FY22, FY23, when the market really soured on sort of cash burn and loss-making businesses, and had to embark on some cost out and some rationalisation, a bit of a turnaround. But they've done that.
All right, let's have a look at the market leaders. On a topsy-turvy day, we were down around 0.5% at one point, but we've closed pretty flat. Now, we are seeing this big switch, as we were mentioning with Jimmy, into a lot of the unloved stocks from last year. So PLS, Mineral Resources, looking very solid today. PLS up by 12%. Medicus, of course, rising as well on those new contracts, up 8% to $307.33. Having a look at the laggards today in the session, some weakness in some of the uranium players. You saw Suncorp under pressure too, down 3.3%, and JB Hi-Fi off by 3%. A bit of a switch out of the retail space in general today, which did quite well yesterday on those expectations that we will see a rate cut next week. In terms of the small end of town, well, Tetra Therics, we were speaking to them yesterday, this small cap. They've had a great run since their debut earlier in the week, up 23%. Some speculation, is this the next CSL? Is this something that you really need to be looking at in terms of advancement in that space? Wildcat Resources also looking good, up 12%. To the downside, in the small end of town, Energy World off by about 18%. And I mentioned there was a lot of support in lithium, not so much for Gallon lithium, which was down 8%. Well, tonight, of course, we get the US non-farm payrolls a day earlier than normal for June because of the July 4 holiday Friday. 120,000 jobs expected to be added according to CBA. Factory orders for May also being released. Tomorrow, household spending for May. Now, there is a suggestion it could lift, but of course we had that pretty subdued retail sales data coming through earlier for the month of May. Let's have a look at where the local market has finished. Just down 0.1% there on the CBO 200. The ASX 200 has closed down just 2 points to 8,595. So very, very flat, you would say. And as I mentioned, you have seen a big rotation from the banks, the likes of CBA, into the miners and the energy stocks. And a really interesting note coming through from MST Marquee, and I am quoting the AFR here, who's obviously delved into this report. They've crunched the numbers, MST Marquee, and decided or came through with the fact that if we see CBA get back to where fund managers think that it's worth the value of the share price, not where it's been trading, then that could drag the overall market down by some 5%. All right, that does it for this edition of the COB. We'll be back from 9:45 a.m. Eastern tomorrow. Have a great evening.